Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is July 18th, and today's episode is going to cover a whole lot of news about spot ETH ETF's staked version. We're going to talk about RPL's price action. We're going to be talking about other protocols doing some interesting things with their revenue, and we're going to be talking about regular spot ETFs. So let's get started with this packed episode.
10, 9, ignition sequence start, 6.
So we're going to start here with this tweet that Jasper shared in trading, and the tweet was from Scott Johnson replying to Eric Balkunas, but let's actually just go to the tweet and see what's going on here. So what happened yesterday was there was an interview with Hester Peirce, who is a commissioner with the SEC, and she is one of the two Republican commissioners with the three Democrats, because there's a Democratic presidency. So the Democrats chose three commissioners, and Hester Peirce has kind of been pro-crypto for a while. So she was in the interview and she said that there are a couple of things that the SEC will be looking at in the future, and I think she was kind of hinting at if the Republicans win, and two of those things will be a staked ETH ETF, and another will be redemptions in kind. Now, let me explain what redemptions in kind are first before we get onto the exciting stuff for us, which is the ETH ETF. Right now, when you buy into an ETF, you buy into it with dollars, and then when you exit that ETF, that crypto that you buy in the ETF, like Bitcoin and from soon ETH, that is sold and you get dollars back. So that is called cash redemption. And the applicants actually applied for ETFs with something called in-kind redemption. So if you put your money in, you can either put in your cash, or you could bring your crypto to an ETF. You can put it in there, and then when you want to take it out, you have the choice of taking it out as crypto, and either, I'm not sure if you'd be able to self-custody, but I presume you would be able to, or you could take it to another ETF and they could custody it for you. So that was actually denied by the SEC, but it looks like under Hester Peirce is potentially under Hester Peirce in the future, that could become an option again. Now, the thing that's exciting for us is this idea of a staked ETH ETF and how that's going to work. So here, Scott Johnson says, I still find it strange that we've got the Sol ETF filed, but no ETH staking. Both are dead on arrival with a Biden win. Staking probably marginally more likely than Sol in 2025 with the Trump win. Why no issuer throwing their hat in the ring? So this idea a couple of weeks ago where ARK 21 and I think VanEck, ARK and VanEck, I think, were the ones who filed spot Solana ETFs, and the idea was that this is kind of like banking on the Republican win and a more favorable regulatory framework for crypto. But what Scott's here saying is that people should be doing the same thing for a staked ETH ETF, banking on Republicans winning and then getting their foot in the door, because the whole process takes like 9 months. So by doing it now, you're kind of having the final deadlines in March next year, and by then the regulatory environment could be totally different, which means that these ETFs could get approved in a way that they just wouldn't now. So here, Eric Balkunas, and these guys are the Bloomberg guys, right? So here, Eric says, my guess that they feel they'll be able to add it into existing products, but it's a good question to raise. And then here Scott says, so then maybe we'll see them next week after launch. I guess that makes sense. We'll need to go through the 19B4 process regardless again. So Jasper here said, he asked the question saying, what do you all think about the use of sufficiently decentralized liquid staking tokens such as in such an ETF? And he got no response to that, but James Seyfarth replied saying, yeah, if I were them, I'd let these things launch before I filed another ETH related 19.4B. Then I'd file two pretty quickly. I'd file one 19.4B to allow options, and then file one to allow staking. So there's going to be some movement coming on the ETFs front. I think it looks like very quickly with crypto, and before we know it, we might have a whole range of products. So there'd be staked ETH ETFs, there'd be options, so you can like long and short and buy puts on calls and stuff on BTC and ETH. So there's going to be a whole lot of market stuff going on. Here, Jake Sheminsky, who's kind of like a lawyer and involved in crypto legal stuff, he says there's no good reason why the SEC should prevent ETH ETFs from staking. Staked ETH isn't a security, and investors can fully understand the risk of a staked product and decide for themselves if they want to take that risk. He says it'll take a while, but this is a when, not if, in my opinion. Then Jasper asked again, he said, what are your thoughts on use of a sufficiently decentralized liquid staking token, backing such an ETF? And here Jake actually did reply. So he said, Jake said, in theory, decentralized LSTs pose less risk and have more transparency than centralized staking services, so the SEC has no basis to discriminate against them. He says, in practice, the way the SEC attacked Rocket Pool and Lido in the consensus complaint signals trouble ahead. And then here, Jasper said, thank you for the response. I agree with your analysis, though. If Trump is elected, the base case for near-term staking ETH ETF, then the SEC is no longer the same blockade. However, under Biden, I agree that the road to LST adoption is much longer and will likely require the in-court resolution of the consensus and Coinbase cases. So here, what Jasper is saying, that basically if Trump wins, which is what the current outlook looks like, that Trump has around a 60% chance of winning the election, Democrats around a 40% chance of winning the election, the regulatory framework will change in such a way that the products that could be available might broaden in scope compared to what would happen under Democrats. Now, what I then kind of went on with this was, says when the staked ETH ETFs work on the basket of LSTs, well, I'm actually jumping a step here. So the idea basically is, right, that if you get a staked ETH ETF, then you have two options. One is, well, actually three options. One is BlackRock can go and stake that ETH themselves, hypothetically, which they're not going to do because they don't want to touch they don't want to touch anything. They don't want any involvement. I think they even have to be separations between custodians and managers and stuff. And I just lost my train of thought. I'm sorry. So what happens they have managers and stuff. So then the more logical aspect, I guess, what people think will happen is that BlackRock will have this ETF with staked ETH in it, and then that will go to Coinbase, for example, who are their current custodians of their ETH, and then Coinbase will stake that on their behalf. And most people think something like Coinbase or Alluvial or a service like that will be the ones that will stake that ETH. There is a third option, however, which is what Jasper is hinting at, is that these ETF issuers could just say, what's actually easy in all of this is we will just buy LSTs or LSTs really on the market, and with that purchase, what we'll do is we'll just hold those in our basket, and that is easier than doing anything else, and we'll just custody those LSTs instead of having things actively staked, and that is where things will get interesting. So then I put this tweet out saying that when the staked ETH ETFs work in a basket of LSTs, extra weight will be given to our ETH because it's best in class, like it is already in many protocols. You all aren't ready for the amazing things coming from Rocket Pool. And then Hani Abu replied, throwing a dash of water on this, saying that sadly in reality it'll be based on who has the best biz dev teams, and that will be ST-ETH or CB-ETH. Now, yeah, Rocket Pool does have some areas to grow in this, but one of the things that we have to realize is, like, when new protocols come online, especially over the last couple of years, the main trifecta of LSTs that they've been working with is ST-ETH, CB-ETH, and R-ETH, and as R-ETH has the best reputation as an LST in the space. So if they do get advice from people in the space, then that's kind of what we'll be seeing. So I think that's going to be really interesting to see how that plays out. And it's actually a really exciting time now that there's a lot of like hopium in there, there's a lot of copium in there, and you know, you have to take all of this with a grain of salt because there's just too many variables. But it's nice to kind of like imagine how this might work out sometimes. This is not me saying that this is going to happen. You know, the chances of this happening are quite low, but this is one of those situations where if this did happen, the potential impact of it would be like monumental. So it's definitely something worth keeping an eye on. But the main thing for Rocket Pool to keep doing in this time is keep growing, keep developing, keep trying to be the best version of itself that we can. And you know, I feel like the community and the team are really doing that at the moment, and we've got some really exciting things going on with that. So of course, you know, there was a little bit of hype and the community was kind of whipping itself up into a little bit of a frenzy because of this. And then what ended up happening is the price started going up. So yesterday afternoon, like, people in trading kind of realized, hey, the price is going up, what's going on with that? Like, here Sneaky says RPL went up, ETH went down, portfolio changed by like $5. Halilu said price always goes up just before I can buy and down right after. So let's actually have a look at the price and see what's going on. So right now, well, I'm looking at the 4-hour chart here, so you're actually seeing it quite zoomed out. Let me change my screen so you can see that. Actually, that's not any better. Sorry, Binance just like renders badly on my feed for some reason. But what you can see here kind of is that you know, a couple of weeks ago or last week, I guess, the price was horrible. The price of everything was down, and this is when like the crypto community was kind of flooding itself into, I don't even know what kind of state, like just really negative space. The price went down to like $13.32, and since then, you know, RPL has been an absolute tear. It's gone up 50% basically in that time, and well, it's had a couple of big moves up. So last week it had like a 20% move up, and then right now we're looking at another, you know, 20% move at the peak yesterday, with around a 16% move up in the last 24 hours right now. So the price has gone from $13.22, which it was on July 8th, all the way up now to $20.41. And of course, you know, this price isn't great, but the fact that it's moved up so strongly hopefully is a good sign. And I'm really hoping that 13.22 was bottom in terms of USD price. And actually that also coincides with the bottom on the ETH price. So as you can see over here, you know, the ETH price bottomed at around 0.0048. So I guess anyone, well, 0.0047 even. So anyone buying under 0.005 is doing really well. Since then, like, you know, those moves up, ETH has gone up, of course, but RPL has also gone up. So as RPL has gone up about 50%, the ETH price has gone up around 25% or 20%. So you know, ETH has been quite strong as well. And here in the last 14 days, RPL is up 13.5%. In 7 days, is up 26.5%, and in 24 hours is up 15%. So RPL performed really strongly with this news, but I think it might just be that, you know, it's not that the two pieces of news are linked, but it might just be that you know, RPL people might be starting to feel a bit more bullish about it. I have no idea. Like, I don't really understand how these markets move, but I guess the best thing to do is just buy your tokens and hold your position and hope for the best. So yeah, but let's move on from that story now and try to see this. So in some general staking news here, we have this quote from Jasper about ETHify. So said, starting last month, the ETHify Foundation announced we will allocate up to 50% of protocol monthly revenues to buy back and liquidity provide ETHify tokens. By purchasing tokens from the open market, we aim to increase treasury holdings of ETHify and enhance market dynamics of the token by facilitating better trading conditions and user experience. So for those of you who've been following along with Rocket Fuel for a while, you know that in the tokenomics proposals, one of the options is for the community to buy back and provide liquidity for RPL. So it seems like ETHify have taken this idea and are now using some of their revenues to do this. Now, I think this is a very interesting idea. It's a good idea for their token price potentially, but it's going to be really interesting to see how it works out. So we've kind of got a little bit of a case study here in in revenue capture and how it's going to play out. So I think it's really interesting as well that ETHFI have chosen the buy and liquidity provide option instead of buy and burn, which have very similar consequences in terms of the price of the token, but have different optics, right? Like if you say buy and burn, that's definitely like a meme. If you say buy and liquidity provide, what happens is it's less of a meme, but I think it has some positive consequences on the token, with there being massively increased liquidity, especially at certain price points, like whatever they want to put that. You can give the protocol a lot of support on the secondary market, which I think is quite interesting. Valdorf here replied by saying it sounds sensible, which of course he's going to say because he's a proponent of Rocket Pool doing the same thing with RPL. But that is definitely something worth keeping an eye on, because I think that is going to be something that like Rocket Pool could have a look at. One of the things that I'm curious to see about this as well is like what the legal advice ETHFI got. It might be worth reaching out to someone there and asking them about what their process was, because one of the things that the Rocket Pool community is stuck on is, as far as I know, is about getting legal advice for what to do with the surplus share of the RPL revenue, or the staking revenue that goes towards the RPL. I think that's going to be really interesting to see how those dynamics play out and get that information. So I'll be asking, I'll maybe talk to Jasper about it, because Jasper, I think, knows people over at the ETHFI team, and they'll be more likely to reply to him. But I think that's really, really interesting stuff. Okay, next we've got news of a validator here. This is validator 1466038, and you might be wondering, why am I showing this random validator? Well, this validator got a proposal yesterday, and this validator is NodeSet's first proposal on mainnet. So congratulations to NodeSet for getting this validator out. That's really cool news, and for getting a proposal. So good stuff, NodeSet. I really like that this has an effectiveness of 100%, so they're doing pretty well with that. Let's have a look to see if I can find their vault and see how it's doing, to give you guys an update. So last we checked, there was about 700 ETH in there. Yeah, so it looks like they haven't had many inflows over the last couple of weeks. It's been kind of flat at around 700 ETH, and it looks like 727 ETH. So for the last couple of weeks, last 3 weeks, they haven't really moved that much, but they're getting pretty good effectiveness scores now. The APY is a bit low, but that I think will smooth out over time. But if we have a look to see how it fits with other vaults, so if I look at search by TVL, so the Gravita NodeSet vault is still number 6. The effectiveness is kind of in line with Dream Vault or Genesis. Like, it's not too much off that. It's not the best, but it's definitely not the worst, which is good, I guess. Maybe if it was a little bit higher, it'd be better. But they are firmly green yellow instead of like red, but not solidly green as well. So hopefully that can improve a little bit over the next few weeks. But I'm really hoping they start to get more TVL in and trying to climb up the leaderboard. Now, I think that the big product that's going to come out of NodeSet, of course, is going to be Constellation. That's the one that we're waiting for. That's the integration with Rocket Pool. And I think the TVL that they're going to get there is going to be a lot higher than this one with Stakewise. But congrats to NodeSet for getting this landmark. Okay, next we're going to be talking about the ETH ETF, and this is the spot ETH ETF, not the staking one that we were talking about in the beginning of the episode. Well, here James Seyfarth, again, with the Bloomberg guys, says that here are the details for Ethereum ETFs that we expect to launch next week. We're only missing details for ProShares ETF, and 7 out of the 10 funds have fee waivers. So like we were saying at the beginning of the week, or last week I think it was, that the final S1s are going to come in this week, and the SEC is almost ready to approve them. We're going to be getting the fees with the launch expected on Tuesday next week. Well, here now we can see that all the applicants are ready. So Franklin, Van Eck, Bitwise, 21 Shares, and Fidelity, they are all waiving their fee to begin with. and they have different periods for which they're doing this. Some of them are doing this into 2025, some of them are doing it for 6 months, some of them are doing it for 12 months, some of them are doing it until the end of the year. So that's actually really interesting how that's working. But the post fee waiver fee, all of them are kind of going in at around that 0.2%, so 200 bips, which is actually really, really fascinating to see. However, there is one of them here that stands out compared to the rest, and that is Grayscale's Ethereum Trust, and that is actually going to stake at a fee of 2.5%. So a lot of people are quite pissed off at this and saying that ETH is a garbage product, and they are doing like shady policies to keep people locked in at these rates because of like their cost basis, or maybe they're not being in a tax advantaged kind of account, so they'll incur capital gains, etc., if they're trying to trade out of it. So they've got a captive audience, and it looks like they're going to get big outflows. So I think Grayscale here could have done the smart thing of trying to keep more of their users, but I guess they did the cost benefit analysis of seeing how many users do you want to keep versus how many fees do you want to generate, and for them having fewer users paying more fees is more beneficial than having more users paying less fees. So sadly, it's the users who are the ones who are going to have a bad experience with this. They might be incurring taxes or fees for longer that they shouldn't be, but sadly that's the situation there now. Now they also have a Grayscale Ethereum mini trust where they take an ETH, and that is going to come in at a lower fee level at 0.25% or 250 bips, and they've got an introductory period of half fees of 0.12. So that I think is going to be capped at $1 billion, so around the 10th of the size of their main trust. So I guess some of the ETH will go out of their main trust and into their mini trust. I don't know if it's actually maybe I'm mistaken. Maybe it just here James Seyfarth says that no, 10% of ETH will be automatically spun off into the ETH. That's the mini trust. Is currently holds 10 billion in assets. So ETH should essentially start its life with $1 billion in assets. So then they said let the ETHness stakes begin next week, and then ProShares have their waiver at 6 months, not 12 months. So yeah, it looks like the ETF is ready to launch. We've got everything in place now, and I think what's going to happen here is that I think we're going to get strong inflows on day one. Now, the reason why I'm saying that is because I think there's a lot of vested interest in making this ETF be the second most successful ETF ever after the Bitcoin ETF, and of course that is massively successful, one of the most successful ETF launches ever. And there's an idea going around that the ETH ETF will be the second most successful ETF ever, and I think that's going to be absolutely wonderful to see. So yeah, I'm here for it. I'm really hoping that the ETH ETF surprises a lot of the bears in terms of the inflows. That's my expectation, and I'm really looking forward to seeing how this plays out next week. So I'll definitely keep you all in the loop with what's happening on that. Okay, talking about some other news now. Here we have a blog post from Vitalik saying choose against choosing your political allegiances based on who's pro-crypto. So this is an idea that's been going around recently where people are saying such and such candidate is pro-crypto, therefore I'm going to vote for that person. Well, Vitalik kind of is arguing against that, and this is actually a really fascinating blog post. So he says that over the last couple of years, crypto has become an increasingly important topic in political policy, with various jurisdictions considering bills that regulate versus actors doing blockchain things in various ways. This includes the Markets and Crypto Assets Regulation, which is MiCA in the EU, efforts to regulate stablecoins in the UK, and the complicated mix of legislation and attempted regulation by enforcement by the SEC that we've seen in the United States. Many of these bills are, in my view, mostly reasonable, though there are fears that governments will attempt extreme steps like treating almost all coins as securities or banning self-hosted wallets. In the wake of these fears, there's growing push within the crypto space to become more politically active and favour political parties and candidates almost entirely on whether or not they're willing to be lenient and friendly to crypto. In this post, I argue against this trend, and in particular, I argue that making decisions in this way carries high risk of going against the values that brought you into the crypto space in the first place. And then there's a picture of Vitalik at the table with Vladimir Putin in 2018. He says, at the time, many in the crypto government expressed willingness to become open to crypto. So then, the blog post is broken down by crypto is not just cryptocurrency and blockchains. He talks about crypto and internationalism. Crypto friendly now does not mean crypto friendly in 5 years from now. Divergences between decentralization and acceleration, and then more like, but I like politician because of their entire platform and outlook, not just because they're pro crypto. So why should I not be enthusiastic about their crypto stance? And then that he kind of finishes the article. So he says, if a politician is pro-crypto, the key question to ask is, are they in it for the right reasons? Do they have a vision of how technology and politics and the economy should go in the 21st century that aligns with yours? Do they have a good positive vision that goes beyond near-term concerns like smash the other bad tribe? If they do, then great. You should support them and make clear that's why you're supporting them. If not, stay out entirely or find better forces to align with. So this was extremely controversial, which is interesting because a lot of crypto Twitter, it seems like it's kind of embracing the Republican Party in the US and embracing Donald Trump. So by Vitalik saying this, it kind of like stirred the hornet's nest. Autism Capital replied by saying, damn it, Vitalik, and a picture of like tired Ben Affleck smoking. Vitalik actually like clapped back really well, saying, I don't understand why you're still doing your current Twitter strategy. I feel like you kind of fell off 2 years ago. In my opinion, you either be an honorable intellectual or you go full inverse bro. Your current approach fails at both, neither clever nor funny. And then a whole bunch of people had different takes and kind of defending their positions or kind of agreeing with Vitalik. I'm not going to get into it because you all know my political stance and this isn't a political show, but the fact that Vitalik came out and said this actually was worth mentioning, I think. It's really funny because Vitalik actually got some stick last week as well because he shared a picture of him wearing a mask on an aeroplane, and masks are kind of like a hot topic, divisive topic in the US, with a lot of it being a kind of a symbol of either being like left slash, not really left, but like Democrat slash Republican, like, wearing a mask, you're supposedly sheep, and not wearing a mask means you're independent and free spirited or whatever. I don't even know how these lines get drawn up, but with Vitalik wearing that mask last week, it was interesting to see about how people were kind of like trying to pigeonhole him using those mental models that they've kind of come up with over the last few years. And now with this post as well, people are just like kind of trying to cancel Vitalik or something. I don't even know what's going on. It's kind of stupid, but it's really interesting to see who's responding and how they're responding. But I would let you go and do that all by yourselves instead of trying to put too much of my own opinion on that story. So definitely go check that out though. It's very interesting how it's all playing out. And finally, I'm going to end the episode with some sad / happy news, I guess. So Thomas popped into trading overnight my time / evening in the US and said, anybody else here having an absolutely crazy week? And then he goes on to say, feels like something is shifting in the universe. So, people might have thought that he was talking about Donald Trump assassination attempt over the weekend or whatever, but that's what Hodges said. He said, yeah, Trump ear damage paid for all our sins in crypto. It's up only now, boys. But Thomas said, I saw this on Twitter the other day and it resonated deeply with me. I'm pretty sure it's the only reason I'm even alive. So there's a photo of a knight kind of resting, and it says, destiny urges me to a goal of which I am ignorant. Until that goal is attained, I am invulnerable, unassailable. And then he tells us what happened. So he says, I nearly killed myself in a Jeep crash the other day before Trump nearly got shot. And then Snow says, thanks for not doing that. Yeah, like, thanks for not dying. But he says he flipped off a small cliff by accident while not wearing a seatbelt. And then he said that he broke his nose, he had a concussion, which is incredibly minor considering how bad the wreck was. So thankfully he's okay. And then here's this picture of his Jeep, like kind of like upside down on a bush. And the airbag was deployed. He said he wasn't wearing a seatbelt, of course. He said that if it had landed on a rock instead of landing on a bush, he would have most likely died. So thankfully, Thomas is okay. Thomas, of course, is I'm a huge fan of Thomas on the show and like in person as well. I've met Thomas numerous times, and I wish him the best of luck in a speedy recovery. It seems like he's doing much better now, but thankfully he's doing good. So he said that there's no one else in the car with him, and that he wasn't wearing a seatbelt. So please wear your seatbelts and don't be an idiot like him. But and then he saw that his dog actually didn't want to go with him that day, which was unusual for his dog, and thankfully the dog wasn't in the car, so she was okay. So yeah, thankfully Thomas is okay, and I'm glad that he's on his way to a full recovery. But this is hopefully it'll spur him on to bigger and better things in his life. So get well, Thomas, and come back stronger. And on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day ahead, and I will see you all soon. Bye.